Good morning, everyone. I'm T3 Live Editor-in-Chief John Darcy.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing red arrows around the world. Our futures are slightly down this morning after a harsh day of selling in our markets yesterday. We are hanging on to some key support levels on an intermediate basis, though, John, so we'll have to see if we can hold them today.
Yeah, I think world markets are just taking a cue from yesterday's action in the U.S. markets, where, like you said, we saw some of the harshest selling that we've seen since early October. Like you said, we broke the 8 and 21-day moving averages, very short-term active trader type support levels, but all in all, no major levels breached. We can go ahead and take a look at the chart of the spiders, give you a visual of it. And as you can see, just by glancing at the chart, like I said, some of the harshest selling since early October, a wide range bar after we opened around flat yesterday, broke the 8 and 21-day EMAs, but we do have this pivot here. This pivot low around 178.35. It looks like it'll be tested this morning, with the futures down about 1 to 3 handles, but all in all, no major downside this morning, and it's healthy to see a little bit of a pullback in the market. You know, I think people were maybe expecting a little bit of a melt up, grind up through the end of the year, and it's good to shake things up a little bit.
Well, it was a day that a lot of high flyers and groups that have been strong took a break, especially in social media. But that could possibly change today. Could be on your radar to watch that after the news that Facebook will be added to the S&P at the close of trading on December 20th, which clearly cements it as one of the biggest and most important U.S. companies. Yeah,
it seems like whenever this market looks like it's going to fall apart a little bit, whenever it looks like it's going to get a deeper correction than just a 1-2% little pullback, some kind of news comes in. I'm not saying it's orchestrated or anything like that, but something always seems to come in and save the day and help prevent a deeper pullback. And that is sort of what we are seeing with the overnight news that Facebook is going to be added to the S&P. We'll take a look at the chart of Facebook, and like you said, yesterday we got a pullback in some of the high-flying sectors of the market, including social media. Facebook on Tuesday staged a nice break above this bull flag pattern that we'd highlighted in off the charts. But then yesterday we erased most of those gains, which gives you, the idea that we could get a little bit of a pullback at least into the 8 21-day moving average, maybe the lower end of that bull flag. But we got the news that S&P was going to add Facebook, so it's opening, last time I checked, around 51.20, which is above the high from the last 2 days, and perhaps could ignite a higher move, as that's a big validation for Facebook and a big boost for them. So. And it's also having some residual effect on the whole sector and the whole market, probably.
Exactly, yeah. It could be some validation for the group itself, the importance of social media. Now, we take Yelp, for example, retraced 3.7% yesterday, but maybe we'll see that get a lift today. Yeah,
social media is such a hard thing to value, these companies, these stocks, because basically you had the advent of the internet and search and all that type of stuff, and that was the big new paradigm shift that we saw in our society and in technology. And then social media stocks, you look at traffic numbers and usership and all that type of stuff, and it's replacing a lot of traditional internet. People are using Yelp for search, they're using Twitter for search, they're using Facebook for search, and it's hard to quantify how much they're going to really take over some of these traditional hubs of the internet. But like I said, or like you said, it validates the group a little bit when you have S&P at it. But I'll take a look at the chart of Yelp. After that little rant, as you can see yesterday, Yelp on Tuesday also, like Facebook, is one that we listed on off the charts. Had an igniting move on December 4th, a nice bull flag, and then an igniting move. We thought, oh, it's off to the races for Yelp. Could test some areas. It sort of has a descending channel that's been in place in Yelp that never got broken. That's what we were hoping for, to get additional momentum, but instead yesterday it got rejected near the upper end of that descending channel and erased all of Tuesday's gains. So definitely not the type of action that gives you a whole lot of confidence, but like we said, a little bit of residual impact on the social media stocks from that Facebook news. See if they sell it or see if they take it as a big boost for credibility for the group.
Yeah, and perhaps Twitter could get some continuation, because on the flip side of the coin, Twitter actually held in relatively well yesterday, managed to close in the green with small gains, about 0.6% or so, but pretty impressive considering the action of the rest of the group.
Yeah, Twitter's one that's just really hard to call right now for me, and one that I would generally just stay away from at this point in time, because like you said, yesterday we did get a 0.7% gain in Twitter. It did close off its highs a little bit, not the most inspiring action, but showed a lot of relative strength to the market and to its sector in particular. So that, you see relative strength like that, you think maybe Twitter can continue higher, but I think it needs at least a rest period, if not some downside probing into maybe the 8-day moving average, which is all the way down below 50. So we can take a look at the chart of Twitter. As you can see, really impressive move out of this pattern. We didn't list it on off the charts, unfortunately, but Scott talked about it I'll draw the pattern here. In the morning call a couple weeks ago, Social Butterfly was the name of the morning note. I know that because I'm a morning note title guy. It's something I take great pride in. But anyways, we saw this pattern here develop, and we listed it in the morning call. And right on cue, we got tremendous momentum in Twitter. Finally, some demand on some news that they were going to add some more targeted type ad technology. But like I said, extended a little bit, hard to chase up here.
Well, and just one more name, LinkedIn, also retraced that day, more than 2%. It is hanging above the 8-day, though, so pretty constructive behavior.
Yeah, overall, you know, this news this morning is going to lift these social media stocks. It's going to be crucial just to see how we handle this gap now, because we can go ahead and take a look at the chart of LinkedIn. We had 3, 4 days, 5 days of impressive price action there, but then yesterday we engulfed 3 days of intraday price action. We still have the gap to contend with from December 6th. So opening higher this morning, see again whether they can gap and go to the upside on this S&P Facebook news, or whether people use this as just another opportunity to sell these a little bit higher, you know, until the end of the year. Most people thought that these leading type stocks would potentially melt up and grind up through the end of the year. People don't want to sell these big winners because they're going to have to pay tax on those capital gains, but they got a little bit greedy trying to wait it out till the end of the year, and took a little bit of a haircut yesterday.
Well, 3D printing stocks and casinos, two other groups that have been strong lately that took a dive yesterday. We're going to go in the trenches with those right after this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with two other groups that have been strong lately but took a little bit of a dive yesterday. Let's start with a 3D printing group, 3D Systems, down about 4% yesterday, and no news out yet this morning to lift them as we had in Facebook.
Yeah, nobody came in to save the day on the 3D printers, and I don't think the 3D printers are getting added to the S&P anytime soon. This is a sector that fundamentally, in terms of value, yes, you know, you don't like to naysay because of valuation and things like that, but the valuation on these has just gotten to points that it's a little bit absurd. And you don't short based on valuation, you short based on technicals, because there's a lot of people that have shorted on valuation over the course of the years that have gotten punished as a result of it. But when you see a day like we saw yesterday in DDD, we can go and take a look at the chart. It's a little bit of a signal that it needs at least some rest, if not a little bit of downside probing. I think the 21-day moving average, it'll come in here around 75, is also this pivot area from back on December the 6th. Would be a natural level in the short term for DDD to test. I also think this sector could be due for a little bit more of a pullback. You saw this big pullback as it touched 85, then corrected all the way back down to below 70 over the course of 3 days. I think this is a group that's gotten a little bit ahead of itself. There's nothing, you know, there is some growth there, but not at the levels that we're seeing in terms of the prices of these stocks. And the technicals yesterday confirmed that we could get a pullback, so definitely keep an eye on some downside potential for these 3D printers.
Right, a further example of that would be Stratasys, which had a big gap up, but then quickly filled the gap to the downside. Yeah,
Stratasys is another one yesterday. Didn't have as big of a percentage loss as DDD did, but it did have an engulfing bar. You take a look at the chart. DDD is the leader of the group. SSYS, at times it can show some leadership, but of late hasn't been able to bounce as strongly as DDD has. And yesterday, like I said, big wide range engulfing bar to engulf Tuesday's price action. That is a very bearish candlestick that tells you that it's headed lower. The first pivot to watch would be this low around 115.27. The next pivot from that correction that I talked about in DDD, the low for SSYS is 108. So those are the key levels to watch in terms of pivots, and I definitely don't think it's out of the question to see pullbacks into one, if not both of those levels.
Well, another group that has been strong that flashed some signals to take caution yesterday is the casinos. Take Wynn, for example, had a nice run over the past 5 or 6 sessions, but clearly looks like it's due for a rest.
Yeah, the casinos are a sector that have been a focus for us on Off the Charts over the past couple weeks as money continues to rotate through this market. I talked about how news seems to come in whenever the market looks like it wants to break down, and it helps mitigate some of the losses. But you also see money just continue to rotate throughout this market. Whenever the tech and biotech stocks get tired, you see money rotate into tech stocks, and then you see tech stocks get tired, you see money rotate into casinos. But we're starting to see some money rotate out of the casinos now. When yesterday, after you see big rally, 6 days up, really impressive gains, and a stock that stretched from his 8 and 21-day moving average, what we start to look for is some sort of topping signal, and that's what we got yesterday with the red dog reversal, traded up through the previous day's high and then back below. Your entry is on a break back below the previous day's high. Your stop is at the high of the day, and then if you're not involved yet, you could look at yesterday's low as a potential entry, as we did close a little bit off the lows, but this is one that definitely I think is due for a pullback, and I think a neat and tidy pullback would be back into this prior breakout level that stands around 173, 174. So definitely wouldn't be unhealthy to see a retest of that breakout before maybe continuing higher for Wynn.
All right, well, and Las Vegas Sands as well looks like it's struggling at upper levels. What would you say are the key support levels to watch?
Yeah, similar type thing happened with LVS. It had been not quite as strong as Wynn the past few days, but another red dog reversal type setup. Not completely a red dog reversal, because on Tuesday it was actually a little bit wishy-washy as well. But yesterday, if you take a look at the chart, you got a trade back above Monday's high, and then a close back below. Basically, it was flat on the day, but it's another signal that this could be due for a little bit of a rest pullback. At least allow the 8-day to play catch up, if not come down and meet it halfway. I think that would be, and you also have the prior breakout level here in LVS that I don't think it's out of the question for the market to potentially have LVS come down and retest that breakout level at some point.
All right, let's do some quick hits and start with Apple, which had a breakout failure yesterday and put it in an outside day, but today is up a little bit on the news that Apple's share in China's smartphone market leapt in October, making it actually the third biggest in the country. So maybe we'll see it rebound a little bit today.
Yeah, I mean, I'm a proponent of Apple from a lot of different perspectives. From a value perspective, I think the stock became extremely undervalued just because growth had been slowing. The stock in the company is such a behemoth that it was always going to be tough with the type of market share they had to keep up that level of growth. But you've had people like Carl Icahn, Leon Cooperman obviously come in and support that notion that the value is there. And then the technicals have started to line up as well. But yesterday, like you said, a little bit of an outside day, but a similar situation with Facebook, not as significant of news, but they have that China Mobile deal that's done now, which is China Mobile is 7 times bigger than Verizon. So you talk about the type of market that's opening up to Apple now that hasn't yet been quantified in any type of earnings. Then you also have louder buzz about a potential TV set-top that could launch over the next year or so. And then obviously their well-documented pursuit of wearable technology. And then you have mobile e-commerce is another area that Apple seems to be pushing into a little bit with some of its recent acquisitions. So a lot of stuff, a lot of catalysts that aren't yet priced into the stock, in my opinion, that could lead it higher. Yes, news does get priced in when there's speculation and reports of these types of things, but I don't think it's fully priced in. Anyways, take a look at the chart. This became a little bit not a quick hit, but you saw a bearish candle yesterday. It could lead to a little bit of a pullback. It's right at its 8-day, but I don't think you'll get any type of significant pullback. I think people are very eager to be long Apple right now, and everyone hates it below 400. Now everyone starts to love it as it gets back near 600. That's just the nature of fear and greed in this market. But if we do get any type of significant pullback, I would definitely look to be a buyer.
Definitely not a quick hit, but you get it passed because it's Apple. How about Tesla? Held in relatively well yesterday during the sell-off. So what do you think of the composure of Tesla now showing that little bit of relative strength? Yeah,
Tesla's one that you had that big run, obviously, this year, one of the best performers in the market, and then had a significant pullback over the last few months. But it's one that I think could definitely get on its horse back to the upside. It had a big igniting bar, if you just go ahead and take a look at the chart. Big igniting bar on December the 3rd to get it back in the game. But since then, with a stock that has a 30% short float still, you'd think that an igniting bar like this might lead to even more of a short squeeze. And that's what we saw for a period of a year in Tesla, is that shorts just kept getting run. But we have seen a little bit of a descending channel form, and you could call it a bull flag or whatever you want. But this is one that it was a little bit of a relative strength yesterday. It didn't break down like some of the other leaders did, The 8 and 21-day moving average are supporting the stock now, caught up a little bit, and it's one that I definitely think if the market does turn up, or even if the market doesn't turn up, I think Tesla is one that, with that big short interest, could be due for a squeeze and could come back into favor a little bit, get at least back up to the $150 level as a first initial target.
All right, and how about MasterCard? What do we do with MasterCard now after it jumped yesterday after it announced a stock split and the quarterly dividend increase?
I mean, this is one of those stocks that you look back at the chart over the course of the last few years and the last year, and you just kick yourself for not loading into these credit cards in size. And then you get more news yesterday that's extremely bullish for MasterCard. 10-to-1 stock split. They're going to make it less capital intensive to get involved. I think the benefits of a stock split sometimes are a little bit overblown, but this stock obviously has become very expensive, and it's going to the psychology is it'll make it more accessible for a larger number of investors. And then I think even more significant was that dividend raise. They raised the dividend by 83%, led to that big gap up. This is a stock that gives you basically everything you want. You can see the gap on the daily time frame, closed a little bit, or well off its highs, and a little bit down from where it opened. So not exactly the gap and go scenario that maybe bulls would like to see, but I mean, just look at the trend on this stock. You know, back from 2009, just not even any sort of attempt to break that trend on a monthly level. On a weekly level, it's the same story, just a steady uptrend. It's one that you wish there was some sort of significant pullback that you could have bought, something like that, but this one's one that you had to just look to buy it high and sell it higher, and it hasn't really let a lot of people in. If you've been involved with it the whole time, then congratulations, because you've got a heck of a winner.
All right, well, time for the last word here. Any final bits of advice as we begin the trading session today?
Yeah, I think it's just more of what we've been talking about the last couple weeks, is that through the end of the year, I think the market has come so far, it's going to be hard to get another big igniting move, Santa Claus rally into the end of the year. I think, yeah, you could get some melt-up type action, but overall, I think you'll get, this week is sort of a microcosm, I think, of what you'll get through the end of the year is choppy action. You'll get some grind-up type action, you'll get some good stock-specific momentum, but then you'll get some pullbacks. You'll get some people taking profits near the end of the year, especially look for tax selling, all those types of themes on losers, but we also saw some winners get a little bit of a haircut yesterday. So in general, I think if you've had a good year, definitely sit on your hands a little bit, take a short-term type approach. Don't try to be a hero when things aren't necessarily setting up.
All right, and that's your morning call for this Thursday. Happy trading. Have a great day.